let's go across to our guest who's now joining us to weigh in on these stellar moves that gold and silver both have been posing. We are joined by Mr. Nitin Kedia, who's a commodity expert, who's now joining us. Hi, Mr. Kedia. Thank you so much for taking the time out and joining us today. Mr. Kedia, let me ask you. The first question is that in 2025, the kind of move that we saw on gold, it was up 50%. Even in 2026, we've just started the year, and year to date, it's already moved up 7%. Is this the time to really dial down on the optimism now that the prices have surged so much? Bit of a correction in the short term, perhaps on the back of profit booking?
Good afternoon, ma'am, and happy Makar Sankranti to all of your viewers. See, what has happened that in 2025 there was a huge divergence between the paper assets and the real assets, and as there was more and more risk on the paper currencies, and the world was moving towards de-dollarization, geopolitical tensions were at their top, and tariff disruptions were also barring the trades. So we saw that gold went up by 50% and silver actually went up by 150%. So that is going to get continue in 2026, maybe first and second quarter both, because nothing has changed so far. And what has happened that the geopolitical tension, as you mentioned, that with Iran, they have already increased, and Trump is has its eyes now on the green light. So for us, we think that definitely it's a dial down time for the gold, but it needs to be a cautious approach. We need to be factoring in that there can be any 5% or 10% corrections on the price, because any healthy uptrend is always backed by the corrections, and this correction may also happen anytime.
Right. Mr. Kedia, we did see Goldman Sachs that had come out with its gold targets. In fact, they had raised the targets for December 2026 to $4,900 an ounce. That is up from $4,300 per ounce that they had given earlier. What are the levels that we can watch out for? Would you concur with these levels, the projection that Goldman Sachs has given for gold?
We are a little aggressive on the gold targets. For January, we are sitting on $4,800, and we are expecting that we'll see around 4,800. And till March, we are expecting somewhere around 5,000 or 5,100. And probably this year we are having, we feel that gold will touch 5,500 or $6,000. It's not time to play defensive in the gold. It's a time when you have to manage your risk and be aggressive.
Okay. All right. Also, Mr. Kedia, has the elevated gold prices really impacted the demand for gold jewelry on ground? What is the situation? Because the gold prices are on the rise, but how has that really impacted demand for gold jewelry?
See, investment, we have seen 40,000 crore demand coming in 2025 from India, only in the ETF part. But when we talk about the jewelry, the demand is certainly very down. And we are at around 40% of the usual demand that we see around this season.
Right. Mr. Kedia also talked to us about the fact that besides gold, silver is also shining away. I mean, that's also sitting on record high. Spot silver has jumped, above the key $90 mark, an ounce mark. It's for the first time that that also crossed those levels. Now, gold is more influenced by market mood, while silver is facing a physical supply shortage. Now, 2026 is the fifth straight year of structural deficit in the silver market. So, what do you see on the cards for silver? Because while silver, in terms of industrial usage is a very important metal, there have been, very volatile moves coming in on silver because of the supply shortage. How do you look at silver? How should investors look at silver?
See, industrial demand is very high in silver, and what we have seen in Venezuela last week, it was not about the crude, it was about the silver and copper that Southern America always produces. And with Venezuela, what US has done, that it has given a counter answer to China, who was giving them warning about the rare earth metal supplies. So now the raw material for rare earth that has been conquered by the US, and the way they have restricted the exports, either it is US or it is China, it shows that silver is going to be a new gold in 2026, and we expect that in Indian market we'll see 3.95 lakh target coming in 2026, maybe by October.
Right. So silver is the new gold, but Mr. Kedia, what about the investors who have already missed the bus? Because these are very elevated price levels for both gold and silver. So for investors who have already missed the bus, how does one strategize entering into these commodities?
See, those who have missed the bus, what they can do is they can enter into the SIP mode for the silver. What they can immediately start the SIP in silver. There are different options available. They can go to the physical jewelry shops and they can buy 100 gram or 50 gram silver every week or every day or every month. So that is the that way they will be able to do the averaging if price shows some correction of 10-12%. Because in silver it's normal. The 5 to 10% correction is always a normal. And if I talk about China today on the Shanghai Exchange, silver is trading around $102. So there is a huge demand. Generally, $100 is considered to be a very psychological level, and the way it has traded above that level for 4 hours, it shows that the traders are buying silver at any price. So this madness is going to continue, and maybe we may see around 125 or $130 levels coming in silver very fast. I think that would be the point where we could see some profit booking or something like that.
Right. So, Mr. Kedia, would you suggest that one should now trim their positions in gold and perhaps look at silver because it offers more relative value?
See, silver offers more relative value, but as of now, gold silver ratio is around 51, 52. So it is highly oversold. Once we see some bounce in gold silver ratio in spot terms, dollar terms, and it comes around 62, 65, then we can look for a swap between gold and silver. But as of now, I think if somebody is holding gold, so he can hold a gold because gold silver ratio is highly oversold.
Right, and would you recommend, Mr. Kedia, would you recommend some profit taking because there can be, a short-term fall is what the analysts are expecting, perhaps in the back of profit booking. So people who are already positioned in gold and silver, is it about really time to take some cash off the table, perhaps book some profits?
I think one should not worry about short-term volatilities if they don't need a fund, if they don't require funds, and if they can hold for 8-9 months, they should hold because it always good to lose some battle rather than losing a war. So if you want to win a war of prices and make a very good return, so I think you should not worry about the short-term volatility. But if you're an ultra short-term trader, then again you can look to book some profits.
Okay. Also, some of the recent price swings were also due to the annual commodity index rebalancing, which led to brief profit booking in the last week. Now, despite all of this, do you see the overall trend for both gold and silver to remain intact in the long term? And as an investor, as a long-term investor, can we look at both the commodities, gold and silver, as a long-term hold?
Definitely we can look to hold gold and silver for long term, maybe for 8-9 months more. And as far as this rebalancing is considered, we were very vocal about this rebalancing that this is not going to affect along. It may be an impact of
Next is?
rebalancing, but it will not have a much larger impact. And today we can see that all the people who believed in the story of gold and silver, they are laughing on the face of the people, those who sold or those who liquidated their positions.
Absolutely, Mr. Kedia. It's the classic investors FOMO where you've already liquidated and now the prices have moved up. But that's the catch-22 situation because the prices keep moving up every time you think that they have peaked out. But you still say there is more legs to the rally. That's what you're saying, right?
Right, correct.
All right, Mr. Kedia. On that note, thank you so much for taking the time out and joining us. Gold and silver sitting at record high levels, shining away. But with that, it's time for us to slip into a short break. Don't go anywhere. We'll be right back with more updates on commodities after the break.